price of gold would have to be either revalued or you would have to expand the gold market. But by seeing all of these countries bring their gold back and accumulate it in the levels that they are, I think it's massively bullish for gold. And when we talk about, to your point, the Treasury reserve capacity, look, the Treasury can be weaponized. Who the hell wants to hold Treasuries anymore that are weaponized? And when you look at gold, it's outperformed the Treasury market for 50 years. Just now, doubled the performance over the last 25 years without the risk, without the geopolitical risk, the confiscatory risk, the sanction risk. So yeah, I do think it will be incredibly bullish for gold.
The precious metal set record after record in the first half of the year, despite the U.S. Federal Reserve keeping interest rates high, strength in the U.S. dollar, and divergence in U.S. Treasury, 10-year yields, ETF holdings, and gold prices. Gold and silver prices were solidly higher in early U.S. trading Thursday, with gold hitting a 6-week high and back above $2,400. This comes in the wake of another tame U.S. inflation report that suggests the Federal Reserve will cut interest rates sooner rather than later. Based on fundamentals, AndySchectman predicts a new global settlement currency might emerge, leading to a revalued gold market, as the Dutch National Bank suggested. Schectman believes that the trend of countries repatriating and amassing gold points to a very bullish outlook. However, he considers U.S. Treasuries have lost appeal due to geopolitical risks, making gold a superior investment. In that sense, the entity's report has estimated that Chinese holdings of U.S. Treasury bonds have fallen by $102 billion in the last 12 months, while gold reserves have increased since January 2023 by 8 million ounces, equivalent to $51,000 million. Regarding the transparency of gold holdings, AndySchectman shows skepticism about China's reported 2,600 metric tons of gold, suggesting their actual reserves are likely much higher based on their production rates. He suggests that China secretly uses state-owned proxy banks to accumulate gold, avoiding IMF reporting. As of the end of June, China's central bank maintained its gold reserves at 72.8 million ounces, unchanged from the previous month. This figure has remained stable for 3 consecutive months since April 2024. Over the previous 18 months, China's central bank had continuously purchased gold until May this year, with cumulative additions totaling 10.16 million ounces. Now, we present the clips of AndySchectman's insights from his recent interview with Arcadia Economics. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
The price needs to be revalued according to the Dutch National Bank. If every one of these countries has been buying gold and accumulating it on their balance sheet, valued at $35 an ounce, mind you, in all of these central bank balance sheets, the price of gold would have to be either revalued or you would have to expand the gold market. But by seeing all of these countries bring their gold back and accumulate it in the levels that they are, I think it's massively bullish for gold. And when we talk about, to your point, the Treasury reserve capacity, look, the Treasury can be weaponized. Who the hell wants to hold Treasuries anymore that are weaponized? And when you look at gold, it's outperformed the Treasury market for 50 years. Just now, doubled the performance over the last 25 years without the risk, without the geopolitical risk, the confiscatory risk, the sanction risk. I do think it will be incredibly bullish for gold. And I also think if you read that white paper, they talk a little bit about the fact that what will start out as a common settlement currency, this unit, will turn into something valued more than just the gold value. It will have a supply-demand fundamental. And if all of a sudden we move to a system that inspires trust rather than one where they have to rely upon a government that is broke, insolvent, and going around the world and imposing their will in what is viewed as a hypocritical position, yeah, the demand for the unit could explode and it could become, as the paper describes, a unit of settlement that actually becomes worth more than the underlying assets based upon supply and demand. But to your point, yeah, the gold market will expand and will be revalued, or a combination of the both. Let's start with the United States. When was the last time we updated and audited our gold holdings, the Treasury or Fort Knox? I believe it was 1953. We haven't reported or done anything to clarify just how much gold is there, even at the behest of Ron Paul, who was voted down, yes, by Congress. I don't know who voted him down, but they never did allow the audit to happen. Why would it be in the vested interest of a country like China to tell us the truth? You know, they tell us they only have about 2,600 metric tons of gold, yet Since 2000, at least, they've been producing anywhere between 400 and 500 metric tons a year. Even call it 200 metric tons a year. The numbers would be extraordinarily higher than what they are. My entire career, Chris, everyone would always say that the Chinese are very much not forthright with how much gold they accumulate. In fact, their numbers would stay around 1,200 metric tons forever, and they would never update them. And I think it would be in their vested interest to keep that close to the vest. And I think it's phooey. Aside from that, much of the gold could be accumulated by their state-owned proxy banks that would then, at the behest of the PBOC, accumulate metal, not be forthright about it, not report it to the IMF, deal directly with the refineries in South Africa and Switzerland, not report that to the IMF. Why would they? And if they realize that just by lip service, just by saying that they can knock the price down and subsidize their future purchases, it would be in their vested interest. And if someday, as the head of the Dutch National Bank talks about, we see a gold revaluation, well, look at how much gold we actually have. And here it is, come and audit it. And now it's revalued to a much higher level. So just like it doesn't do any good to talk about the trades that these institutions are making to crowd themselves out, as people are gobbling up information at the speed of sound, why would they want to tell us that this is our primary objective, to accumulate all the gold? So no, I don't believe it. I think it's nothing but conjecture. I don't care who's saying it. I think it's propaganda. I don't think they've stopped buying gold. In fact, they're probably increasing it, just not running it through state channels that report it to the IMF. I have no proof of that, but that's my feeling.
AndySchectman underscores the vulnerability of the dollar, echoing concerns raised by Putin about the obsolete Bretton Woods system. He highlights the U.S.'s high debt levels and aggressive asset seizures, which erode confidence in the dollar's value. Concurrently, Schectman underscores a global shift as countries repatriate significant amounts of gold from international hubs. The global gold demand, including extra Burr acquisitions, OTC, is 1,238 tons for the first quarter of this year, up by 3% year in and year out, according to the most recent data of the World Gold Council, quoted in an analysis made by a metal precious dealer. From AndySchectman's perspective as a seasoned analyst, he criticizes the politicized nature of potential rate cuts, suggesting they won't significantly impact the economy. He believes more drastic measures are necessary to address the growing national debt and economic challenges. Let's get back to the interview.
I mean, maybe. I mean, everyone's expecting it into the election. It's very politicized at that point. I mean, if they were going to do it, you could argue they should have already done it. But ultimately, I don't think it changes very much. I think the long end of the bond market ultimately marches higher. And when you're talking about 25 basis point rate cuts, while the effect is not really substantial, I think the perception is. And that the perception is that the Fed will never normalize their balance sheet, that they will choose austerity well after they do inflation. That inflation will be the way that they try and get their way out of this mess of $1 trillion in debt every 100 days. You can add more to that now. That's $100,000 a second. You can add more to that now if they lower rates, and it just will reignite the inflation engine, by which we're lied to as to what those levels truly are anyway. So it's just a game. And it doesn't mean a whole lot. If they really wanted to do something about it, fine, drop rates 100 basis points, not 25. Do it all at once. But they're not going to do that. This is all politicized and nonsense. And in the end, won't do anything but continue to diminish our reputation on the world stage, in my opinion. I mean, and that's even what Putin said in his speech in St. Petersburg recently, that Bretton Woods system is dead and the dollar is backed by nothing but the perceived confidence and faith in the dollar. You talk about faith and credit of the U.S. system. The credit is upside down. We're nearly 130% debt to GDP. We're very much indebted, nearly 200 trillion in debt. And when you talk about the faith, what faith do you have in a system that weaponizes and outright steals Russian assets? And so when you talk about faith, I don't know what faith there is in the system, and that's what he's getting at. That's a scary thing. And that's why I think we're seeing all of these central banks accumulate gold. And that fabulous interview that you did a few weeks ago and really opened my eyes to, I had known a lot about Enbridge, but not a lot about the unit. And I've dug deep into it. And I believe indeed this is the reason why all of these countries are accumulating gold and repatriating it, because it will be part of a new system. It will be pegged to a new system, which will eliminate the need for faith. You only get one chance when you ruin credibility and trust and faith, it's almost impossible to put back together. It's like smashing a glass against the wall. How do you put it back together? I don't know that we can. So I think that is true. It is about the faith, and faith that arguably has been squandered. And there's been almost 30 banks that have brought their gold back from the New York Fed and the Bank of England recently, the biggest being, of course, India. They bought 1.5 times the amount of gold in the first 4 months of this year than they did all of last year, and repatriated it along with 100 metric tons held at the Bank of England. And you mentioned Saudi Arabia and Egypt and all of these African countries repatriating from the New York Fed, which gives access to COMEX, and the Bank of England, which gives access to the LBMA. They don't care that they have access to these hubs of easy trading. They would rather remove the counterparty risk and bring it home. I think that's a great point.
Like other assets, gold prices can move significantly depending on supply versus demand and the broader economy. Recently, gold has been on the upswing, with many investors turning to this precious metal to counter high inflation and economic uncertainty. How do you perceive the role of gold in shaping future global financial stability and currency dynamics? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.